Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So, as gold market has been closed yesterday, it was closed because of the Independence Day in the United States. I think that we could update some of our long-term scenarios on other currencies that we're not considering too often, such as the Australian dollar, New Zealand dollar, Canadian dollar. So, in general, on all these currencies, some formations are forming that suggest its strength. Australian dollar, New Zealand dollar. Why it could happen is because you know that the Australian dollar and Canadian dollar has tighter relation to commodity market. And you can see what's going on the commodities, especially on the hydrocarbons. So it's what the performance market shows. And the market was forming here as long-term bullish reversal patterns. And currently market is coming to the vital point where this pattern either has to start to work or it will fail. And the first target has been reached by the New Zealand dollar. So in general, you should remember that we are watching this picture for a few months since the start of the year, probably, and even earlier we talk about this. So, and now you can see just in last week, market hits the weekly ABCD XOP target in agreement round 62 area. So it means that right from this point, market should start upward direction. Yes, it might be minor bounce just with respect to this technical support, but larger pattern suggests that should be reversal, because if you take a look at the bigger picture, you easily could recognize that here we have a kind of the hand and shoulders pattern, right? From the harmony, market stays precisely at the bottom that equals to the bottom of the left arm, which makes it harmonically balanced, and that's actually the point where bulls should think about taking the long position to the upper direction. Because, well, this is the perfect area for position making the decision, at least from the risk point of view. It's because you could place really tight stop just below the XOP, that will be enough. Just because market either has to turn up, it's because no wash and rinse, no more downside action should happen. Market hits the XOP, that's all. So any further downward action will be the sign of weakness and the sign that hand shoulders could fail. That's why here is actually, as I call it, is a culmination point. The point that gives you the best risk-reward ratio. It doesn't give you the guarantee that you will succeed in this trade, but it guarantees that your risk will be minimal. So your loss will be lowest loss you ever could get based for trading on this pattern if you take position at the culmination point. The negative moment here stands with this pattern. What I would like to say is that take a look that this right part is significantly smaller than the left part. And if you take a look at the weekly monthly chart, you will see that the acceleration here seems too strong, which is really bad for reversal pattern. It should be vice versa. So if you reverse this pattern, suggesting that this could be left arm and that is right arm, that might be much better. Just build the reflection miracle to this. It will be proper shape of the hand shoulders. But here we have a bit different, wrong shapes, because here should be the control of the bulls, but here instead we see the control of the bears, the too fast action. It tells you that chances on the failure still stand significant here, but still this is points that we need to consider. That's what about the big picture. On a lower time frame, on the daily, we have narrowing wedge pattern that potentially might be treated as a bullish. Although, as you know, the wedges very often breaking down with acceleration. This also could happen in the case of market will fail the pattern. On the lower time frames, market starts to form multiple bullish reversal patterns. So if we'll take a look at the 4 time frame chart, you could see simultaneously two patterns is forming. First is a butterfly. That's already hits the 127 extension. And here market is forming the reverse hand and shoulders pattern. So it creates the background for possible taking the position. Theoretically, you also could consider the 1618 extension of the butterfly in case if market will be dropping further. That's acceptable, more or less acceptable. It stands 61, so slightly below the XOP on the daily chart. It's forming this pattern, still might be more extended to the downside with the possible reversal. But perfectly, I would suggest that it should be right there. And that's actually the patterns that if you would like to try to trade it, you could consider it. Although, as I said, the too strong performance on monthly chart to the downside is a warning factor for the bullish scenario. Speaking with these head and shoulders, it's also you can see this too fast acceleration to the right arm. But in general, as you can see, market is trying to form some bullish patterns, suggesting the possible upward action. Some pullback, if even hand shoulders will fail, but some pullback probably here might happen just because this is strong monthly support. And we could see the bounce either from this area or from the 1618. That's two levels that you have to keep an eye on. So thinking how you would use this, either you take, for instance, 30% here, we'll be watching what will happen. Market dropped here, you add more place tight stop and be watching for a pullback, or you do nothing with this. You're seeing that these bearish signs are forming. You will be waiting for a deeper retracement right to the 1618 extension of the butterfly. Then makes the decision on the possible taking. Bears, by the way, also could keep an eye on use these situations because this is, as I said, big pattern on the weekly chart. In the case of the failure, that will be great bearish signal, suggesting that market will drop below the 55 area. So, and if, for instance, you could watch, if you have the bearish view, you simultaneously could watch for the same butterfly. Once it will start failing around 60-73 area, that will be the signal for possible taking the short position. That will point you that hand shoulders probably will fail. So you can see this is currently gold mine for trading on the different time frames, and it's exceptionally interesting. And it always happens when the market comes to important monthly target, monthly support area. Approximately the same story we have on a Canadian dollar, on an Australian dollar. On Australian dollar, we have actually the same pattern, but I mean the hand and shoulders, so monthly chart, the same pattern that we're watching for. But you could see that if New Zealand dollar already has completed downside target, Australian dollar is still coming to it. So the OP has not been reached yet, so it should pass a bit lower, somewhere to the 60-67 area before something will happen. So that's what we have on these Asia Pacific currencies. On the Canadian dollar, it's a bit different story, but it's also forming the pattern that suggests its strength. So you can see after the strong downside action here, market's forming some kind of the flag pattern on the Canadian dollar, or even you could draw it as some rising wedge, which also might be treated as the bearish. It's gradual and choppy and kind of the ABC retracement on the lower time frames, which suggests that it's also only the pullback, and the Canadian dollar probably should keep rising, just showing more drop to the downside in perspective of the few months. So that is the common thing for all these currencies. Choose what you like more, and well, I think that it's really good, bright patterns that they have on New Zealand dollar, and it will be logical, reasonable to not miss them and trying to trade.